Welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley, President and Senior Wealth Advisor. Today is April 30th, so we are closing out the month of April, and I'm sure many of us are like, thank goodness. April 2nd is when we saw the announcement of the tariffs by the Trump administration, and April 3rd, we began the rapid decline in the markets that carried through on that Friday as well. The more interesting thing was going into the following Monday, the stock market did sell off. We rallied we had a 10% swing in a matter of minutes because there was some news out there was going to be a 90-day moratorium on tariffs, and the market rallied 5%, and we saw these big swings. But more importantly was the bond market. Typically we see people or investors have that flight to safety and buy treasuries when the stock market is volatile. Instead, we actually saw treasuries being sold off on Monday, the dollar getting weaker. And that was the most concerning day. As we say in the business, the stock market is the children's table, the bond market is the adult table. And when you see the bond market having some dislocations, that gets to be a little more concerning. That being said, the bond market has really kind of smoothed out. We have seen the 10-year treasury come back down to a level that is more applicable to where we are in our economy. So that's been positive. Last week, that third week of April, we did see a nice recovery in all of the indexes. The S&P 500, the largest 500 companies, was up over 7% last week. So these are things that we have to be mindful of, and why we've been telling clients we must stay the course and be very disciplined in this time. Our action is to take no action. That is our active decision, because these are the periods where investors can make the biggest mistakes in trying to get out of the market and get back in. And it's difficult when you see the market down and then up very quickly. So we're really trying to convey that with our clients. As we moved into the year with our clients, we knew we had good quality portfolios built on our outlook of a slower economy, but still some positive earnings coming our way, and potentially rate cuts by the Fed. So we are still under that outlook. That could change, however, if these tariffs do go into place a little bit more broad than we'd anticipated. We thought more strategic and targeted tariffs were going to be beneficial to our economy and even the global economy. But we'll see. That's the murky area we don't know about yet. So that being said, we did get our first look at some data for the first quarter, and that was the GDP. First quarter GDP came out this morning. Was a contraction of 0.3. We were anticipating a plus 0.4% growth. Some of that may have happened because of some front loading in the end of last year by corporations making their early purchases, knowing that there was potentially going to be this dislocation in supply chains because of tariffs. Some of it certainly is probably due to dislocations and disruptions in supply chains and purchasing. So we'll have to parse through the data a little deeper before we can make some real discernment there. But knowing that we are starting to get some of this data, it will help as we move forward. But again, until we have clarity on what's going to happen with tariffs, it's going to be hard to forecast the next 3 quarters of earnings for corporations. Finally, we are in the midst of first quarter earnings, and so far they have not been too bad. We've had some good earnings announcements, and even companies reiterating their guidance for the next couple of quarters. Obviously, there's been the flip side where companies are saying, hey, I'm giving no guidance because it's too hard to discern at this time and too hard to forecast. So again, I will stay in touch. I will continue to do these quick check-ins just to let you know what's going on and what our rationale is. So thanks for joining me here at Round the Table with Gratz Park Private Wealth. We'll be seeing you soon.